Tim, there's been a lot of speculation about this for months, people choosing to spend their isolation period in the country on a big property, but this data now proves it.
Yeah, we have seen regional markets really surging faster in value than capital cities. In fact, three times faster. We saw capital city housing markets up about 2% through 2020, whereas regional markets were up nearly 7% in value. And as you say, I think this is partly being driven by the normality of working from home or remote working conditions. But to be real, this was already a trend that was starting to gather pace prior to COVID. And I think COVID has really amplified it, probably bringing people's decisions forward rather than really being something that's a new phenomenon here. Regional markets tend to be much more affordable. They've got lifestyle benefits. And now I think with more people looking for lower density housing options, that they also offer up more desirable living arrangements for many people.
And what are some of the best regional markets?
Well, if you look around the country, regional Tasmania really stands out with the strongest growth rate. Over the past 12 months, regional Tassie saw values rise by about 12%. But across the major regional centres, we are seeing the strongest growth conditions outside of Sydney. So markets like Newcastle and Wollongong, the Southern Highlands, have all seen growth rates up around the 10% mark. A lot of the lifestyle markets like the Gold Coast and the Sunshine Coast have seen values rise by around 9% over the year. So it's really those markets that tend to be adjacent to the major capital cities that still offer up commuting opportunities where appropriate, but are also offering up those lifestyle opportunities as well that seem to be performing the best.
Yeah, it's a fascinating trend. As you said, probably the pandemic brought that decision for many couples or singles to the forefront. Now, in terms of the capital cities, how about dwelling values there? How have they fared?
Well, there's been a real range, and I think the outcomes for the capital cities have really been dependent on how well each city has contained the virus. At one end of the spectrum, you can see Melbourne, which was the only capital city to record a fall in values over the past 12 months. Melbourne values were down about 1.3% in 2020. At the other end of the spectrum, you've got markets like Darwin, where values have increased by about 9%. In fact, all of the smallest capital cities has been where the strongest capital gains have been, partly reflecting a much better containment strategy or better management of the virus, but also the fact that a lot of the smaller capitals have generally seen a much more, sustainable rate of growth prior to the pandemic as well. Markets like Perth, for example, are really seeing very strong conditions, but we're still seeing housing values in Perth about 20% lower now than what they were back in the middle of 2014 when they peaked.
The market, as we know in general last year now, has been particularly volatile off the back of the pandemic. Overall, has that been reflected in the property market?
It has, absolutely, in a number of ways, in fact. We saw buyer activity through March and April fell by more than 40% in the space of that 2-month period before it started to rebound. We only saw housing values fall nationally by about 2.1% through the worst of the pandemic. So in many ways, this has been more volatility around market activity. The number of listings across the Australian housing market finished the year about 21% lower than what they were in 2019. But overall, buyer activity finished the year about 8% higher. So that really helps to provide some context into why we're seeing this upwards pressure on prices. We are seeing demand outweighing supply and some urgency coming back into the marketplace.
What's the outlook for 2021?
Well, we are expecting values to continue rising through the year, probably as much as 10%, but ranging from city to city and by housing type. I think we will see much stronger growth conditions for houses rather than apartments. It does look like inner city high-rise apartments in particular are looking quite risky at the moment, with the vacancy rates being very high and rents coming down, not much investment activity in that space. But houses, particularly around the middle ring suburbs, so the burbs, are looking very strong at the moment. I think that will continue. From a geographical perspective, we are expecting markets like Perth and Brisbane, Adelaide, probably to outperform the marketplace due to their affordability and also improving economic conditions in those regions, particularly stronger population growth.
Good to hear. A big year ahead. Tim Lawless, thank you for joining me this morning.